Please read the disclaimer. Hello, beautiful people. Shalom, moneymakers. So the Fed came out with its decision to lower interest rates. We talked about this in part one of the Fed decision videos. Now we're moving on to part two. We'll talk about what the Fed actually said in its speech, how the crypto market reacted, what's going on with XRP, what's going on with Bitcoin and the rest of the crypto market. All I ask from you, is a beautiful smile. Send out those good vibes. Smishity smash that like button. Let's get into it. So currently XRP is actually down. So it went bananas when the decision came out, went up, went down, consolidated. He spoke, it went up. He spoke, it went down. Right now, it's down 2.73%. Actually, similar action here with Bitcoin, but Bitcoin down only 0.25%. Ethereum is up 0.75% because it had moved up prior to the speech. But for the most part, the crypto market is in a mix, right? If you go to the total, it's red, but there are some green, right? There are a little bit of green, but for the most part, the crypto market is reacting poorly to this. The stock market actually finished on a high note with the VIX. Where's the VIX? The VIX is down to 15. Remember, it was over 20, right? And we were talking about how anything under 20 is considered pretty bullish. It went all the way from 28 and came all the way down here to 1577 today. So it seems that people are feeling a little bit more bullish on the S market, but crypto is still in fear. We're still in these lower levels since November, right? We've been in these lower levels since November 11th. Even before that, November 4th, right, when we dropped down here after the beginning of November. So we're still in high fear on the crypto market, and we'll see. Because listen, the Fed said interest rates are now at a plausible range of neutral. It appears Fed Powell is preparing to pause rate cuts, right? He says conditions in the labor market are cooling and inflation remains somewhat elevated. So basically stagflation. So this is the summary, right? Downside risk to employment has risen. Inflation in the US remains somewhat elevated. Interest rates are now in plausible range of neutral. GDP growth forecast for 2026 has revised up. Readings on inflation are higher as good inflation has picked up. And 3 Fed members are dissented today's decision. The divide at the Fed is growing, right? We have a situation right now where the Fed chairman is saying, hey, I'm pausing, probably. We reduced now. He had a question if they were going to raise it back up. He said interest rates will either stay the same, be cut a little bit, or cut a lot, not raised. So at least that, right? Silver lining, it either is going to stay where it is or go down. Now, of course, President Trump is very adamant that he believes that the Fed chairman should reduce even more, be more aggressive with the rate cuts. The Fed chairman doesn't think the same. We know that they have their beef, right? And already Trump is looking for the new chairman, having, like a American Idol reality show, a type of, maybe he's going to bring back The Apprentice and figure out who's going to be the new Fed chair. But we'll see how potentially that could play out. And when we look at this and we look at what's happening, today's decision was pretty bullish, right? The meeting itself was bullish. The US Fed came out and said that they're going to start with QE, quantitative easing. The US Fed may have just started the next liquidity wave with 3 rate cuts and $40 billion in treasury buying. Today's FOMC meeting delivered one of the clearest shifts towards easing we've seen in the past few years. Now, again, wait, I'm going to stop for a second. I just want to remind you that this video is just my opinions, other opinions, people on the internet, right? It's only for educational purposes, for entertainment purposes only, not financial advice. Always do your own due diligence before you decide to invest. Very, very important. Also, if you haven't yet subscribed to the channel, now's the time to do so. Very, very important. Check out the links in the description down below. Some of those links there are affiliate links. So I will get a commission. It helps to support the channel. So thank you for that. The Fed cuts rates by another 25 basis points, making this the third straight cut. But what mattered even more was everything Powell said around it. Here's the full picture in simple words. The Fed will buy $40 billion in Treasury bills over the next 30 days, starting December 12th. Powell said T-bill purchases will stay elevated for a few months. Powell said the labor market is still weak, right? That's one of the signs that we've been looking for because over the past few years, with them talking about inflation, they kept saying, hey, this is a real tricky situation. Usually when you have a recession, what comes is, of course, negative GDP, high inflation, and a weak labor market. But coming off the pandemic, the labor market was strong. There was a lot of jobs. Even though many people became, influencers and started their own businesses, there were still a lot of jobs. The jobs might have shifted. Well, now actually we're seeing a lot of jobs that are disappearing or going to AI and things like that. So the labor market is getting a little bit weak. Also, there was a lot of shenanigans that was happening with all those job numbers under previous regimes. So it's looking a lot weaker now. Powell admitted job gains were overstated by 60,000. See? Powell said the economy is expected to grow next year, which probably means ISM over 50. We talked about this previously, that is a interesting number that has previously given us when the economy is recovering, when the economy is strong. It's a indicator that tells us basically what the producers are feeling, right? And that gives us a gauge on the economy. Whenever it's over 50, it's usually pretty good. I think it's 55 is the number we need to watch out for. So it will be very interesting to see what happens with that. Powell said rate cut decisions will be meeting to meeting, not a present path. So basically, he doesn't know. He says, we'll see the numbers. And when we have the numbers, if the numbers are very good, the inflation numbers are very good, and the job reports are weak, right? The job market is cooling off, then we can think about reducing interest rates. Why? If you're asking to yourself, why does a weak job market mean reducing interest rates? Well, if the job market is strong, that means people have jobs. If people have jobs, people have money. If they have money, they're probably spending that money. If they're spending the money, then the sellers, the producers, they don't have an interest to reduce prices because they're making money. They're selling their products, right? But if the job market is weak, people don't have money. Producers they don't have any, the company's going to go under. They reduce prices to sell more, to have that profit. And then the Fed can say, okay, now we can start reducing interest rates, right? Because if the money is too cheap, then people will take out loans to buy stuff and then inflation won't come down. So it's a very delicate thing. And of course, nobody has the exact answer how to play it. You see, the Fed doesn't really know. The Fed tried stuff. Some stuff worked, some stuff didn't, because what happened in 2020 was a unique scenario. We never saw that before exactly the same way that it played out. We've seen previously where the Fed had printed money and injected money into the markets, but not at the same scale that we saw in 2020. Powell said inflation is still too high, but didn't talk about the hikes. Powell openly said a rate hike isn't anyone's base case, right? That's what we talked about this, right? And Fed projections show modest cuts ahead, not tightening. When you put all this together, it looks like a slow but clear shift toward a more supportive environment. The most important part was the liquidity angle. Treasury bill purchase are one of the easiest ways for a Fed to add liquidity without formally announcing QE. They are not calling it stimulus, but the market will still feel the effects as those purchases flow through the system. Combine that with weaker labor market data and overstated job gains, and the Fed now has a stronger reason to keep cutting if indeed. What happens next? Short-term volatility will stay. Markets will react to every headline, every number, every new data point, but the broader direction is getting clear. The Fed is slowly moving away from tight policy and towards conditions that generally support risk assets, including crypto. If the next few inflation prints show even mild improvement, the path becomes even easier. A steady shift is a tone, a third rate cut, and fresh T-bill purchase is exactly the kind of foundation that usually starts big market moves. Crypto doesn't react to words, it reacts to liquidity. Today, the Fed quietly signaled where liquidity is heading. It's interesting because we talked about the scenarios, I think it was yesterday, and we talked about high probability that there will be a rate cut, but the tone of what could potentially happen in the next rate cut, in the next meeting, is something that we put a lot of emphasis to figure out how the market would react to it. The market isn't reacting too negatively or too aggressively to the upside on the words because we still don't know. Like it's okay, month to month, meeting to meeting, and we'll see how it plays out. After the previous meeting in October, we had the Fed saying that likely there would be no rate cut in December, and then there was a rate cut. So we don't know how things are going to play out. That's why day trading, swing trading can be so difficult sometimes because things change, things shift, markets move, events happen. And that's why when we zoom out and we look at where we were a year ago, we can be very happy. But if we look where we were as more than a year, right? A year and let's say 14 months. But if we look back and we say, oh, when in January, right, of this year, we were, in 3.2, 3.3 for a few weeks there. So yeah, we were in a lot better. But if we go to March, we were basically the same place. So again, it's all about perspective. It's all about where we were and where we're going and where you're looking at price action. Are you looking short term, long term, medium term? Again, long term, I am very, very bullish on the crypto market. Short term, I don't know what's going to happen. Every single day is a new exciting journey. And that's why it's important to subscribe to the channel, to ring the bell so you get notifications about new videos that drop. You get the latest and greatest news. We talk about price action. And yes, you might want to dabble in short-term trades, but that is a totally different scenario. That's a totally different outlook. And you have to approach it in a totally different mindset. Okay, so that's very, very important to remember. Okay, don't forget to smash the like button. Check out the links in the description down below. Drop a comment, 8 for infinity and beyond. Thank you for watching. If you haven't seen part 1, you can go watch that. But I think part 1 is more important to watch part 1 and then part 2. If you miss part 1, it's okay. But you can go watch part 1 as well. I'll link to it here and you can go check that out. Thank you for watching and I hope to see you next time.